Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, all. Ira Epstein of Linn & Associates with your metals market update, and we're now on Thursday, the 12th of April, 2018. It's about 2:33 in the afternoon, that's Central Daylight Time. Well, look at this gold. New lows on the day, literally as I'm talking to you. The market's going to finish out closer to 1342 than it is right here. Remember, the settlement prices in metals are determined 12:30 p.m. Central Daylight Time, but the market trades till 4 p.m. Central Time. So it's got a ways to go. Silver's going to be around 1647. Copper will be in this area, and the platinum's doing what they're doing. Why is this going on? Why did the market yesterday go to 1360 something and then back off so much today? Well, it's because the flow of news is forever changing. Are we going to hit Syria? Are we going to get into a trade war? Interest rates going up or down? You've got so much going on, and it all is countering each other. So often what I do is I go to the charts rather than try to figure it out, because most of the time you can't, and I assume the charts know everything except when a situation overnight happens that you didn't plan. Let's assume that there's an FOMC meeting. You know it's coming. If you want to be in a market, that's up to you. You don't have to stand in front of a train. Sometimes these meetings are big, you don't know what they mean. Other times you get employment data, you don't know. Well, are we going to have war over the weekend with Syria or not? I don't have the slightest idea. We hear one day yes, next day no. France says that there's a chemical attack. Ms. May had her meeting today with her cabinet. I don't even know if she got approval, but everybody's getting ready. At the end of the day, I still say, if we strike, it'll be so surgical, it'll be absolutely beautiful, no need to involve Russia. But what if Russia gets involved? You just don't know. So in the metals, we're backing off $30 from yesterday's highs. You can see on a weekly chart of just closes. This is all it is. So these lines are just developed on a weekly basis by looking at the current close. That's it. And it's not going to take into account Monday's close, Tuesday. It's looking at the current price. That's how it does it. It is staying over the 18-week average of closes. That tells me that there's upside bias. I consider the 18-week average on a weekly chart, the number itself, to be the neutral number. If the market is over it, I have a bullish bias. Under it, a bearish, and then I look to other indicators because at least it's a filter for me to know what I might or might not want to do. Now, if you look at this rally yesterday, you got up to the 1370 level. What the heck changed, you're going to ask yourself, because, as you understand it, nothing's changed with Syria, nothing's changed with anything. Yet you're down all this amount. I'll show you what happened on the chart. First off, you are not trending. If you look at the chart we just have, I'm going to put a filter on it, a study that I created years ago. I had my son's a broker with me, but I had my son at that point in his early teens. I mean early teens. And I said, I think I can teach you what a trend is. And I developed a technique so we can look at anything. Forget the name on the chart. Is the market trending? And if you believe, as I do, that a trend is defined in an uptrend, higher highs, higher lows, and a downtrend, lower highs, lower lows, well, you look at this, you have a lower low on this apex and a higher high. First thing, it's not trending. Second, I look to see where moving averages are. Why? Because so many people use them. And people use them because you'll hear on the stock market the 200-day or the 50-day moving average. Watch the TV. You'll see what I'm getting at. Traders like reference points, and even high-frequency traders, others, you're always looking for where, whatever your formula, your algo is, where might support come in, where might resistance come in, blah, blah. Well, I view the support in the market at the 18-day average of closes. I call that which line? I call that the line in the sand. Even though the market's under it at this point, I already know the settlement price, the market's going to close over it. So I still have an upside bias in the market, not a trend. I then look at Bollinger Bands, and if you come back here with me, this is how the market looked Tuesday. I'm looking to see where resistance and support might be. I've already defined that I'm not trending. But if the market rallies, I'm looking for the upper Bollinger Band to be the resistance. And lo and behold, the market gets to it, goes right on past it, and then pulls back yesterday, not even staying over it. What I define that is one of the targets of the market has been hit. End of discussion. Just because I'm defining trend as higher highs and higher lows doesn't mean within smaller calibers of time there aren't others that are looking at those shorter terms and they're saying, no, I see a short-term trend, blah, blah. Okay, that's what I see. Support, I view back at the 18-day average of closes. And that's what the market has pulled back to. In terms of momentum, momentum is turning down. So I have a market that I view is mixed. Momentum is down. I know already you're going to close over the 18-day average. The bias is up and the swing line isn't trending. I next go to the GLD. Sometimes the ETFs give you a clearer story or the futures lead the ETFs. It goes back and forth. This is of the futures contract. It's just trading the ETF. First thing I see is the support's 126.52. You're at 126.48. Market is not closed yet. It closes 3 o'clock. The next thing, I'm looking at what the market did. It got up to the upper Bollinger Band. It too failed there, and it's following the futures here. Same pattern. I got them lower. I got momentum turning down. I have no trend, and I have a market fighting at the 18-day average of closes. Sometimes the minors lead the parade. I'm looking at this and my eye immediately, and that's how I teach my charting course. You're overbought. Why do I want to get involved in a market that's overbought? It's the first thing I ask myself. If you come back here, and this is Tuesday again, you have sideways action, but momentum is up. You've got higher lows, higher highs. What I'm sure I said was, if the market rallies, I'd look for the combination of resistance at the 100-day and the upper Bollinger Band to be a level of resistance. Lo and behold, the market gets up and over it, closes over the upper Bollinger Band. The odds of staying over an upper Bollinger Band are 5% of the time. And if it does it in consecutive days, each one of those consecutive days subtracts from my rule of thumb one of those percentage points. So now we're coming into today, and the market pulls right back under the Bollinger Band. What was resistance, the 100-day, is temporary support, but I'm still bothered by the fact that I've got momentum trying to turn down here a little bit. Now, let me explain a little bit. You still have both numbers under 70. They're no longer overbought. Yesterday, they were one of the numbers is over 70. It's overbought. Soon as both numbers are under 70, I don't label it overbought anymore. So I'm continuing to look for support in this market. If this gives ground, it might go back to 21.99, but overall, I'm still in the bull camp in this market. When I look at the June gold versus the May silver, I've got a pattern where you peaked out on the ratio. You needed 82.5 ounces roughly of silver to get 1 ounce of gold. It has backed off to 81.34. Okay, I call it in a down thrust because you can see you've got lower highs, lower lows. It just gives me an idea. I'm always looking for an edge on a market. In the silver market, I have, for those of you that keep watching, you know that I've put up on this chart, and I don't do it often, the 200-day average of closes. That's this number here. The 100 is the green, and the Bollinger Band is right here. The 18 is always in the red. And I'm looking at this chart and I'm saying, you know, we keep going up into this 200-day range and it's holding the market back. Yes, you got over it for a short period right here, but most of the time has been under it. One of these times, this sideways action might eventually create a trend where we do something else to the upside. I think there's more potential up than down. I admit that. Looking at this market rally yesterday, market goes to the 100-day average over the Bollinger Band and gets right on up. It hits 1689, knocking on the door of the 200-day average of closes. Today it backs off. Where does the market stop? You tell me. You're right at that 18-day. I'm still looking at basing pattern on the longer-term charts. If I'm wrong, I'm wrong. Do I have a trend? I don't. So looking is free. In the copper market, I have said you're in an uptrend, but I also said this combination of the 100-day average and the upper Bollinger Band, just like in the other markets, a pretty powerful combination. And the idea is I'm trying to get an edge as to what other traders might do. I've seen an uptrend. This uptrend kicked in right back here. You had higher lows, higher high. It's the first time you close over the 18-day average. That's what you're looking for, and you got it there. Might have even had it here. You're not looking for this low at first to be taken out, then this one. If the market rallies, where might it go? Well, first thing, it might go up to this combination. Second, I realize right off the bat it's overbought. Doesn't mean it's for you or not for you, but those are the things I'm viewing. Market makes its run yesterday and today. Tell me what happens. This is Wednesday, by the way, and today right back to the 18-day average. So in the years I've done it, what I see is that the markets try to give you opportunities, and the idea isn't that you're at the screen. You're trying to put your orders in ahead of time. You can't compete with high-frequency traders. It's not your game. They don't compete with themselves. They let their computers do it for them. Understand that. There's no trend that I see in the platinum market. Today's low, 927.50, took out 928. 18-day average is acting as resistance. Momentum's trying to hang in. In the palladium market, you didn't take out that high. I actually think pros might have gone short today against that number with stops over that high. Now they'll have it over 950, 990. But if you close over that 18-day average, they're fighting themselves. Why? Even though the swing line is down, momentum in terms of the slow stochastic is up, and if you close like that, the bias is up. Not everything's going your way. Why do you have to be involved? In the dollar index, look at this sideways action. You're going to read stories probably over the weekend that professional currency traders are having a heck of a time because the euro's not trending, nor is the dollar. They're just going back and forth. They're mirror images, flip-flop of each other. You get to those points and you start saying, well, how do I figure a trading strategy? Well, one of them could be with Modern Trader. Now, it's the magazine, Modern Trader, and they created a brochure years ago called Profitable Trading Strategies in Any Market. And the idea there is to give you what this might look like. And there's a bunch of articles in here. And the articles will give you the ideas, and here they go. Price trading action, the basics, how to use price action trading, caliber and affinity, the American crowfoot, 10 rules that traders might follow. I am not saying that this walks on water and this is the holy grail. You're not hearing that in any manner. But it's ideas, and that's what helps. And here's what the articles look like. And if you like these ideas, fine. If you don't, well, at least you're getting another point of view. How do you get this? It's free from us. We created these into PDFs with their permission. Gives you a whole idea of how this all works. All you need to do is either call my staff, and the number's right here. You can go to our website. You'll see a carousel of free offers. Click on it. You'll get right in. Click up here, or underneath us on many websites says, click here for Ira's free information. I'm Ira Epstein. You have a good